Welcome to Trading Lounge and the daily US stocks for Wednesday, September the 21st. And I just thought I'd run through some of the sectors here quickly. So metals and mining here. So in a nutshell, with all of these sorts of sectors and stock markets and indices and so on, we're kind of expecting something like this here. Now, how this comes down in some of the other markets is yet to be sorted, because some of them may end up coming down in something like this here to finish off. So just there's two kind of pathways that I'm toying with at the moment. Not that they all have to be the same as well, but yeah, the general sort of gist of things is that we are in a downtrend, and we're not in this whole market here. You can kind of see where we are really. We're getting sort of 3/4 of the way through this thing, so it's still further to go down in all of this, but yeah, anyway, it just gives us a little bit of an idea. This would be one and two here, so to keep on coming down in this. So if you're looking at any of these constituents in this particular sector here, then you kind of know that you're in a bearish mode here at the moment for this. So the finance sector. So yeah, so I mean, the thing with the finance sector is that when we're looking at the banks, is that we've got a very clear, it's a bit difficult to see it here, but it's very clear when you look at some of the big banks that we've got an A and a B and a C wave here. It's definitely corrected. At some point we're going to be taking out that low. So one of the points here is the same sort of thing really, is that we can expect to be going down further at that point. Now, do we just go down 60% of this, 61.8% of this here, or do we add another 60% onto it? All of these sorts of things, in a lot of cases, wave an A and a B and a C wave here between A and C can have equality, but it also can be a case where wave C here can be have another 61.8% added onto it as well. So we're still, we can look at the target zones down here and so on, but yeah, just I think treating them with equality to start with, and then that way we could, as we go, we can see if they're going to be shorter, or we need to add 60% on, they'll be longer at that point. But be assured, this move up here is a corrective. So that means that this low needs to be taken out. How far it goes? Well, I can do all the projections. It's not a big deal. But the thing is that I've learned over time that it's just better to just count the waves, manage the exposure that you have. And it's always a bit of a work in progress, because you don't always get the count right. I don't care who you are. I mean, it's sort of like it's tricky business. I mean, sometimes you're sure of something, and other times you're not so sure. And to be able to tell yourself the truth is, that's a tricky little thing within itself. The consumer directory. Discretionaries here, the same things. It's holding up really quite well, isn't it? It's not hasn't moved down as far as the other ones, but we do have a corrective move up here, and it will edge lower in due course. Yeah. And the tech sector, well, you see that's come down further, sort of compared to the discretionaries here. So the idea in shorting markets, I mean, I'm not just because I have a license in the financial area, it doesn't mean that I'm an expert at everything. But I do, and I have been around since the 80s, and there's some of the basic rules apply. Like if I was going to short something, which one would I short here? Well, I'd short the weakest one, wouldn't I? I mean, because the weakest one is going, which is really the strongest one to the downside. Because in the market there's leaders and there's followers, and the leaders always have more range in them. They're better to short, so always short the weakest one rather than the strongest one. So yeah, the tech sector here, it's just put this into a better situation there, and I'll do that other one over there too, for that matter, just to make it look, give the impression that I'm a nice and neat and tidy person. Yeah, tell that to my wife. So yeah, I mean, it'll be something, you know, it'll sort of bump along into this, but we're still, you know, we're definitely coming down here. You know, we're still coming down. I can see in some conversations in social media on our channels that I think it was Morgan Stanley and JP suggesting that this bear market's just about over. Yeah, I just can't see that at the moment. In fact, I'm short their banks, so we'll see. Yeah, same with the industrials here as well. It's coming down quite nicely, really, isn't it? I mean, I haven't caught up and labelled most of this, but it's not a biggie. But you know, I mean, it's basically moving the same as, you know, the indices, really, isn't it? You know, so we've got the count on that. But this, you know, these guys will be a good one to short because they're basically locking under this 90 here. You know, that's the good thing, because, you know, I'd rather I don't like shorting something into a big number like this, because this is, you know, not always, but, you know, you can pretty much expect some sort of bounce off it. We haven't got it here. We had our bounce a little bit earlier, but it's not over just yet. But shorting under here means that it's retested that and it can go down further. And we're definitely in a bearish trend here, as I was pointing out yesterday with everything. So yeah, this will end up down at 80, if not lower, you know, all these guys. So yeah, the healthcare sector is holding up pretty well, but you could see here, for instance, this is not 5 waves here, is it? Do you know what I mean? It's in 3 waves. It's corrective, so we could look at this as 1 and 2 as well, or we could look at it as an A and a B. We could go a whole. This is the thing with all of this, is that you can go WXYs and do all sorts of things, but you know, what I can say is that this is still coming down, and we will get a bounce off the old low here, and it'll come back and check supply and then go down, and, you know, come back and test that and have a few sort of swings here because of that low, and then move down at that point. You know, it's all kind of basic, you know, movements, just basic psychology and price and those sorts of things. But be assured, you know, this is not over just yet. It might take its time going down. They're not all going to be, you know, we're all getting old, and and it gets expensive, you know. I mean, yeah, this is definitely, you know, the fact that it's taken out this low here, you know, that's telling us that, you know, it might linger around here for a while, but it's still on the downside. It hasn't tested, it hasn't dropped through and come back and tested it. Do you know what I mean? That's what it should be. That's what it will need to do at some point. Anyway, there's just a little too. I don't think the energy sector was in there. I wonder where that chart's gone. Anyway, not to worry about that too much. That was sort of most of them, and yeah, we'll look at them at time to time. So Apple's one of the strongest players in the market, and, you know, it had the highest move to the upside here. But that said, it has dropped down. It hasn't found the 150 as the resistance yet, and that's what we're looking for here. Now I can put wave C over here, and that's fine. But all of this one here in particular, because it moved up so high, I could count all this differently here, but whichever way I count it, it matters, of course it does. But at the same token, what will happen is that it's come down here, it's bounced, like, you know, this is not the best shorting stock. I would imagine there's better, you know, there's other ones that are better than this, but it hasn't found the 150 as the resistance yet. And even when it does that, it's going to come down to the top of 130, wherever, top of minor group 1 here. And you always get a bounce. When you say always, well, you know, most of the time, it's like scientists saying, they'll never say 100%, they'll say 99.99 or something, you know what I mean? So it doesn't matter what you say, if it's 80% or 90% or, there's a chance that it's going to bounce back. And it normally does off the 3 for whatever reasons. So we can expect that bounce back here for this, so we still need to get under here. You see how that came through there and went back and tested it and then came through? That's all just sort of natural, that it will be something like, it'll eventually be something like that. I hope it's much tighter in here, that retest here, so we can actually, get something from it, in shorting it over this side for that. But anyway, let's just cruise into the 1000 and then 100 ticks here for this. And this is the way that we're looking at it here. So, so last time we spoke, we were looking for it to come up into this box here. It looks like it still wants to test a little bit higher, so keep a bit of an eye on that. But even if it goes high, it's quite the next step. This is what's that, 58. So if it was going to go higher, it would, the natural thing for it would be to be the arrival, the reaction, the first high above the level, and then if it found support on it, I would be a little bit concerned, but it will probably be something like this here. So we may need to shift that because it does look impulsive at that point, and I'll have a look at the 100 ticks here, just see how I've got that counted. I look at so many charts I sort of forget now and again. Okay, so this is how we had it counted yesterday. Let's just, well, it's not over until the big lady sings. So I mean, this move off the low here, see this move here, this is in 3 waves here. So this looks corrective here. This could actually come down from that point. It's not like I've got the best 5-wave structure down here either. So, but this does sort of remind me of being a corrective move to the upside. I could squeeze 5 waves out of this little move with 3, 4, 5 here as 1, 2, but this here, that's it does look like it's in 3 waves, so it might just, and that looks like 5 waves, so it might just come up here a little bit and then start to drop at that point. We're looking to bring the short trade up for this, so we'd really need the 55 here. So if the 55 became the resistance here, so you'd need that, the arrival, the reaction, the first low below the level, and then the retest of that point, and then we can look to short it. But as I just mentioned, it's not a good idea to short the strongest stocks in the market, and this is also 53 here, so you can expect a bounce to come back and put you in the red again once it's shorted. So not the best one to short. So the next one's NVIDIA. So what we're looking for with NVIDIA is a bit of an oddball, but NVIDIA, Meta and Tesla, there might be another one, are sort of doing their own, they kind of got their own things going, but at the same time on an intraday basis they kind of follow the rest of the market, but their timing is different, so they're counted a bit differently. They didn't have the 17th of June low over here for that. They were just different for different reasons, of course. So we've been looking down this as one here, then we have the A wave, the B wave, and then we're looking for 5 waves to the upside. Now it didn't pull back to its 50-60%, so that tells me that this is quite weak at this point because it never reached there. So that's the kind of stock that you would want to look to short, so to speak. We can see we always gravitate to the closest largest number, and it's 130 at this point, so we'd kind of want that as the resistance there, wouldn't we? So we'd want that sort of pattern to come through here and then retest it and then work it from the upside. So shorting it into the closest largest number is a little bit dangerous because you get that bounce off it. It's not the right thing to do. You don't short something into group 1 with a large number here. You got to get it much earlier than that or after. So I'm not sure what's going to happen here. There might be something like this and then it'll come down, but basically we need that first low below the level here. That's the one that you want, and then you can short. Now, it's not the best position in the world, but it's much safer if once you find that low there, and there may be another low further up here, because that should be in 3 waves here. So you could short that, then you could bring it up to here, and it didn't pan out, but that's okay. So you could do that, but yeah, you definitely need that click to go through at that point. Amazon. So Amazon's a bit weak as well. It never really got back up to its area up here for this. It's left me with 3 waves here, so I'd probably have to say that this is down for 1, back for 2, down for 1, and back for 2 here, and then moving down further at this point, you know. So yeah, it's doing all the right things. I mean, it's such an ugly wave count, I have to say. It's sort of, I don't know, I mean, it's just, you know, I feel like I'm sort of in the guessing game with it a little bit in terms of things, you know. But our next move, once the 120 becomes the retest, because when we think of, if I can just put the 100 in here at the moment, this is kind of the closest largest number. I mean, there's other numbers here as well, but what I wanted to say is that, and we can just keep an eye on this as a bit of a lesson, is that once we've got 100, which is a major level, and then we've got the minor level, which is 1, 2, and 3. So that's minor group 1. And then these in here, they're sub-levels. That's another degree down. So we've got major levels, then medium levels, which is not in this space, and then minor levels, sub-levels, and micro levels. So they're just fractals, just like wave structures. But what I wanted to say is that when a market's coming down from the top up here somewhere, what I normally find is when the 120 becomes the retested resistance, you know, with that basically a pattern like this, then it will be pulled down to the closest largest number, which is this one. So that's good to know, you know. Yeah, so it's just a handy little thing. So in this case, it's a long way, you know, down. In a lot of other cases in different markets that you'll use it won't be. But so that means that if we've added a few things here. So if we were going to add to this, we would really want that 120 to become the retested resistance at this point. And also when we talk about this as well, when we talk about this number here, then we also talk about group 1 and group 2. So I'm just going to put that in there. That should be 1720 or 22.5 actually, but don't need that, and this will be 65 number, so 1650. So when we're talking about this number here, the 120, we're talking about group 1 above and group 2 below. That's its swing range. So whatever you do in this particular space here, you'll need to leave the stop out of the way, because this is where it gets really choppy in here. Now it's falling in here, it's sort of, it can't establish itself back on the group 1 here. When this group 2 here becomes the retested resistance here, with the basic pattern that I've just shown a couple of times, when that 1650 becomes the retested resistance, then you know that it's leaving number 2 and going down to number 1. So you can add to short positions here. You're going to get a bounce off the 5, because halfway between 10 and 20, the most important number is the 5. 5 is the second strongest number. So that's going to play out. But that gives you a chance to either take profit or wait for that to become the retested resistance. And then you're coming down into group 1 again here, subgroup 1, 2, and 3. And that's where it gets bouncy, and then that would be group 1 of 10, and then you've got group 2 here, the same thing. So it's just rinse and repeat. But once you kind of get the message of these things, then it makes life a bit easier no matter what market that you trade. It's just psychology, and you can see it all in the market, playing out in the market depth. Here's another one that didn't reach its 50-60% retracement level. So this is a candidate for shorting. And the fact that, you know, in this case, where you look for the closest largest number, and we're not above it, we're below it. So that, you know, just being on the right side of the market, you know, what does that mean? Well, to me, it means, first of all, finding the closest largest number and making sure you've got that as the resistance and not support. You know, I mean, I wouldn't short this into 150 here. I wouldn't do that, you know, because I know that we get something like this. Sure, you can short that at the top there if you wanted to, if you could figure out that. You can do whatever you want as long as you know what you're doing, you know. But generally speaking, this didn't retrace back. We're under the closest largest number. So it's like it's leaving this number here, because this is, when we look at this, this is the arrival, the reaction, the first low below the level, and then the correction here. So when we look at this pattern here again, we can see we've got the arrival, the reaction, the first low below the level, and then so this is where we are here. So we need to find a short trade in here, and we need to find a short trade in here now. We've got that one there. I don't know what I was supposed to do with that, but maybe yeah, because anyway. But so basically we would be looking for shorting it under here, but we can bring it up to here. Now this is 143, so that will be, the next number down is 40. This 4 is not that important, but it will play its part. And on top of 40, you got 1, 2, and 3. So that's important because it's group 1. But also in this particular instance, because everything's a bit small, the 144 is really important, because it's just in terms of geometry, and it's basically the you know, it's where Gann and Fibonacci meet, you know, like Gann's square of 144, and the Fibonacci sequence, you know, 55, 89, 144. So it plays out. It's it's just a number worth noting. That's all. But none of these numbers here should give us too much grief, you know. But it will bounce around here. But normally from the 50 down to the 30 is the next level. So that's really where that's where we should be looking at here. And these numbers will play a part, but it's really about 10, 20, 30, 50, 80. So the Fibonacci's as a price ratio. So this is quite a good trade setup here. We should see more downside to come here for this. So this would be a good trade. Netflix is holding up quite well, but yesterday we're looking for a top, looking at this as 1, 2, 3, 4, 5 up here. Do we have a top in here? Probably, but maybe that 240 here as a retested resistance, and look, as we mentioned yesterday, looking for that. Could probably get a bit closer for that. It looks like 1 and 2 here, but then we've got 1, 2, 3. I don't know if we've got 5 waves here just yet. It'd be nice if we got a bit of a rally back up here somewhere, you know, above this top here, some sort of rally, and then down. Well, when it moves up there, then you could probably move that up under there, if that's going to be the case. Or if you could work out if you got 5 waves in that move there. I just don't know if we've got 1, 2 here, 3 here, 4 here, and 5. We're going down for 1 more before we go. But any sort of rally there is going to leave, let's just assume for a moment that comes down here. Then it goes back up here in 3 waves. Then it exposes that low, you know, that's the point here. And then there will obviously be a bounce off here, because all of this history here has a memory. And, you know, it'll be like, you know, it'll be a bit volatile here. So any trades that you do here, you could bring this all the way, whoops, daisy. You could bring this all the way up to that point there. Once you've got that low in, you can find a second low and look to short that. Or if you can count 5 waves down to this point, then you can look for the 61.8 and short it. And then, you know, have a small position here, and then have another small position under here for that. So there's a couple of ways you can go about doing all of that. Sometimes you can see it and it's easy, and other times you can't see it. So you have to be honest with yourself and say to yourself, do I understand what I'm doing? Because if you don't understand what you're doing, then don't do it. You know, it's as simple as that. And if you're a little bit sort of scared about it because you're not quite on it, well then just, you know, put in such a small amount, it's not going to sort of bother you, and do it as a learning experience. Okay, so with Enphase here, as I mentioned yesterday, if it took out the top here, then we could look at this being 1, 2, 3, 4, 5 and going a bit higher here, because it's just a little bit short in terms of time in relationship to wave 1 here. So it looks like it's sort of rolling over a little bit. If that is the case, and you know, then we'll be looking for an ABC pattern here, basically. Now, it may not come back to the 38.2% retracement level. It may just come back to the wave 4 of 1 lesser degree. But we have to let the pattern mature so we can start to recognize it. Yeah, so we'll just leave it at that at this point. I mean, if it takes the top out, then you can go with that. But otherwise, you know, if it's going to come down, we just have to let it mature. I was starting to poke around with it a little bit on this one here to look at it, because didn't really take out this top here. So maybe we could look at this as wave 1 or wave A, then an ABC for the B wave, and then down for 1, back for 2, because it looks like it's corrective here. So down for 3 here, but we could look at that as 1 and 2 here, and you know, because we need to basically come down for wave A down here. But we'll see what it all looks like. You know, when you've got the beginnings of patterns, it's a little bit of a guessing game. But anyway, we know not to go long. I mean, really would go long on top of group 1 here, because it's the same thing here as well. We've got group 1 above, and then we've got group 2 below, so that would be the 80 here. This would be 72 in there, 65, and 72 there, roughly speaking. And we'll just give that a splash of color, just as a design visual aid, so to speak. So we can see that these numbers are, you know, playing out. So this is group 2. Its job is to hold it to the 3 there, but this is the basic swing range for this number at this point. So whatever we do in here, you have to be very careful. You don't want to be changing your mind too much in here, right? That's the trick. And once you know that, you know, it's good. I mean, yeah. Anyway, I just love the trading levels. They're good. I mean, because basically, you know, once you get the sort of gist of it, you know that, you know, you don't always get the best situation, but, you know, I know that if I'm trading stock for longer term, I know my job is to get to here and get out and then wait for my setup. I know we're going to get this. I know we're going to get the first high above the level. I know we're going to get the correction. You know, the chances of that happening are pretty high. And when you think about it, you know, you think, oh yeah, but I could have gotten out here, Pete, you know, but would have you gotten out here because it's going up? You may not have gotten out here, and then it drops a bit and you think, oh, well, I'll just, what am I going to do now, and this and that. And but what actually happens in here, if you don't take the money here, what actually happens, it just chews up your mind, you know, and your time and your money. Time is money in this game, and you could have had this in another market somewhere else, you know. It's a different story if you're holding for the long term. That's a different story altogether. But, you know, as a trader, you'd be trading from 200 to 300 and getting out and waiting for the next setup. And when you get this setup, you'll be trading to the 500 at that point. And you want a nice big correction here, because this will be the foundation of the next trend, you know. Anyway, enough waffling. So Tesla, so yeah, I'm not that confident in all of this, but you know, the other markets are going to be coming down. So this is a bit like Apple, you know, it's holding up quite high, hasn't sort of given way yet, and maybe it won't. I mean, you know, there are companies in that green space like Enphase and others in the new green world that are holding up quite nicely. So, you know, perhaps I have made this you know, an incorrect count, and this could be the A, the B, and the C wave here, and we're going to keep going all the way up here. But I will recognize that too, because if we push up through here a little bit higher and we have a an ABC correction here, well, then we'll be looking to go long above that. So I'll know what to do and when to do it. All I've been saying at this point, this is not the stock to short. So it hasn't quite made a little high here just yet, and I'm looking for that. It may not have done. We may have a top in there already, but I'll just give that a little day or two to sort itself out before we dive in there further on that. And Alphabet here. So with Alphabet, you know, I kind of wonder about this a little bit. I'm wondering if I've counted this wrong here. I'm wondering if I should have counted this as 1, 2, 3, 4, and 5 down here, and then we have a bit of a bounce off here. I mean, this is This is 100 here, and 1's the strongest number. So it should be sort of interesting how it develops itself here. But I'm thinking that it's a good place to take part profit. If you've got something down here, take 60% or 70% off of this, and then we'll look to, if it becomes the resistance and is just going to kind of continue all the way through here, then we'll play that out. But yeah, in the meantime, I think we just need to be a little bit careful about what we do here, because I might have this wrong, because it, as a 1, 2, 3, 4, 5 here, I mean, it hasn't finished off very nicely here, and it looks like it wants to bounce a little bit. So I won't go into the guessing game here, but what I do say is it's a good idea to take some money off the table here, and then we'll look to get back in. I mean, I'm thinking that it should just kind of keep on coming through here in its own little way. The corrections are all being pretty tight, and we haven't seen any strong bounces. It's not really strong, but if it was going to bounce, the 100 is where it was going to bounce from. Now it's locked into group 1 here, so it's locked in there, which is a good thing. So I do think it will probably just continue down. It just hasn't really given me a nice picture here, because I could only look at this as being 1 and 2 here and 1 and 2 here, but it's not giving me a very nice corrective pattern. It looks like it wants to go a little bit higher. So because of that spike there, that's kind of buggered things up a little bit as well. So I don't know if I need to look at this in terms of, from that high to this low here, and look for a 50-60% retracement level to here, and then drop from that point, staying within group 1. So I don't know if we're going to get something like that. And then down. So whatever you do here, I mean, the thing here, the other point is that if we get a classic trading levels pattern on top of 103, which would be the top of group 1, then we have to get out of the trade. So in that case, we would see the arrival, the reaction, and then the first high above the level. So that first high above the level, that's where the stop would go, but you don't know what price that is at this point, but that's where it would go at that stage. That's how I would treat it anyway. And then if I got a second high here, which is normally the case, then I would bring that stop down to that there. So you may want to do that. In fact, let's just do that. Let's just put that on top there, and we can look at taking part profit or just taking profit at that point. Let's just give it a chance here, because I think it's going to come down further. I don't think it's going to do too much damage. It's just that I don't recognize this here. Okay, I've got to scoot along a little bit. This is Microsoft here in the bigger picture, and this is quite a weak stock, by the way, because it's come right down to the previous lows here. When we're talking about the healthcare and all the rest of it, this is kind of in the middle from the previous low here, so and Apple's up further. So all the stocks that are low down here, like this one, they're the leaders to the downside. These are the ones that we need to short. But in this particular thing here from Microsoft on the daily chart is that it also looks like we can count that as 5 waves down, so we might get a kickback to the 150. But what will happen here is that we're sitting on top of group 1 here, the 230. So between the 230 and the 250, it's going to be bouncy in here. So we've come through here, but we haven't retested it yet. So I think that we could retest it. We're either going to retest it, or it's just going to keep dribbling down here because it's so weak. It's not like it's following the other markets down. It's a strong stock. But at the outset, it's just that, as sort of setting boundaries, is that it can retest 150, and because it's weak, it's not going to find it as support, so it will hit it and may trade above it into 51, 52, 53, but that's about it. And then if it does come down to the 30 here, then it can bounce back as well. So if you're short in this stock, just give it that space, right? Because it still needs to come down further. But this is a little bouncy area here. We're on the good side of it now because it's come through here, it's bounced back, and it's come through. It needs to sort of check it again at that point. There's different ways of counting this down. I've got a bearish candle on 2K and 1K, so we'll just check on that. 2K, where are we here? So I think I've got this as 1s and 2s or something, yeah. So I'm thinking, yeah, based on this here, because I can kind of see, you know, it started off fast here and then it sort of slowed down here. So it could quite easily come back to this point and then bounce down here and then bounce back up here and hit that supply and then move down. It's going to do something like that. That's what I'm just sort of eyeballing that. It looks about sort of right. I could squash it up a little bit further. If I go to 100 ticks, it will have a different count on it, okay? But don't worry about that too much. So from that high up there, we've got wave 2, or wave B. I don't think it's wave B anymore. We can get rid of that. So yeah, look, all the corrections have been very small. So I'm just wondering if we've got wave 1 and wave 2 in here, and then we're just going to be going down for the next level here. So we can go shorter. We can go short under here again, but otherwise we may need to think of it, you know, coming back up here in some way, like an A wave, a B wave, and a C wave here, and then coming down. You know, it may not get all the way up there. It's got to do something going, but all I can say to you is that you can go short under here. That's cool. Under that second low, you could probably go a little bit higher there as well. But otherwise, keep your trade because we know that it's weak. If it ends up here, we'll find another way to short it further up here somewhere for that again, you know. But we're doing all the right things at the right time. I just don't know if this is it here or we're going to have this wave 2 over here or something of that nature, you know. But everything's pretty tight at this moment, so yeah, we'll just stay with that one. We'll see how that plays out. Berkshire Hathaway, so we know that you know, it's a low volatility stock. Yesterday we were counting down as 1 and 2 and 3 and 4 and 5 down here for wave 1, and then we're looking for it to come back in the box. It hasn't come back in the box. I could put this wave 2 over here for this, and we could look at this as 1 here, then an A, B, C, back for 2, and then go down. Now, I don't know if that's the case, but I do know that we need to short it if we go, you know, we need to short. We could probably bring it up to here somewhere, actually. So I'll put that. So basically, if 275 becomes the resistance here, then you can short that. But otherwise, it will have some sort of move up here and cover that gap and then drop and come back and do that kind of thing. But be assured, because we've got 5 waves here, this is corrective and we will go down again. It's just a low volatility stock, and it's kept, you know, things like the SPY and those up from, you know, sort of just bouncing around close to its old low over here for that. But that's where that is. And block is pretty bearish, so we're looking from the top here as 1, 2, 3, 4, 5 for 1 and 2, and it's starting to shape up quite nicely as the 3rd wave here. We're going to have a 4th and a 5th wave, so yeah, just hold your short positions here for this, and we should see further downside. There will be a little bounce off the 60 here for sure, you know, some sort of support, and also 58 and that as well. At 58 is important, so all of this area might give us that 3rd, 4th wave here, and before we're going down again. So we're getting close to that. And then over to the bank, so we've got Goldman's here. So from wave 2 top over here, we've got wave 1 here and 2 here, and then 1 and 2 and 1 and 2 and 1 and 2 here. So we've got 1, 2, 3, 4, 5 here. We've got 1, 2, 3, 4, 5 here. So we're getting basically the retracements, you know, hitting the numbers. But what we do have is we have we have the market giving us 5 waves in these directions here. So it's telling us that the trend is down. There can be a rally coming back into this wave 2 here before it comes down again here. Yeah, so that's sort of where we are for Goldman's, and Morgan's here is much the same. So I've it's a little bit tricky at this one, but the banks rather, but 1 here and 2 here and 5 down for 1 and ABC back for 2 here, and doesn't count very nicely as 1. So I'm just really going off Goldman's here, you know, see what it's got. So look, it can come back into group 2 here. So this is 65, 72 and 80 minor group 2 here, or subgroup 2 rather. So basically it's trying to you know, it came down here and bounced high. So really it's trying to find that this group 2 here, all of this here. Once it finds this group 2 as the resistance area here, then it's going to pick up speed to the downside. It'll get a bit bouncy around, you know, group 1 here and this being the strongest number here. But what it will be doing is leaving this group 2 here. Because that's really this from here. You can kind of see it if I color it in for you. You kind of see that it's came up here, it's hit, it's tried to get up there, it's dropped in 5 waves, it's still tried to get up, it's still tried to get up, but it's slipping, you know, it's slipping, and this is where it will drop quite quickly at some point here, and gather itself back up again. And because people have longs in here, you know, they think it's going up, so they'll all get triggered out, and yeah, all the normal sort of stuff. But this block here is the you know, is the you know, it will become the resistance at this point. Well, that's what we're looking for, and to prove that we need to make new lows, and to prove that, that's why we can add to a short position on new lows at this point. Alrighty, well that's it. Sorry for such a long video, but yeah, anyway, cheers.